What happens when the US government shuts down? This question may seem like a scene from a dystopian novel, but the reality is far less dramatic, albeit with its own set of consequences. Let's dive into the chronological series of events that lead up to such a shutdown. First, it's crucial to understand the concept of fiscal years. The US government operates on a fiscal year that begins on the 1st of October and ends on the last day of September. The government requires funds to operate, and these funds stem from the budget that Congress agrees upon. However, this agreement isn't always a smooth process. Imagine it's the start of the year. The US Congress is grappling with the debt ceiling, essentially the borrowing limit set by law. This limit is like a credit card limit, except for the entire US government. The Treasury Department warns that it can only pay its bills until early June. House Republicans want to use this deadline to force spending cuts, while the White House opposes negotiations over the debt limit. Fast forward a few months, and it's now August. The government's fiscal year is coming to an end, and the Congress is yet to agree on a budget for the next year. According to Goldman Sachs, the US government is likely to temporarily shut down due to a lack of consensus on spending levels and the thin House majority. Disagreements linger, and as September ends, there's still no agreement. The government is now faced with a shutdown. In October, the US government could potentially run out of money to fund itself. The House of Representatives fails to pass rules for a defense funding bill, and the potential for a government shutdown becomes a reality. But what does a shutdown mean? A government shutdown implies that non-essential discretionary federal programs close. It means that many, though not all, government functions cease. Workers are furloughed or put on temporary unpaid leave, and national parks or monuments may close. However, it's not all doom and gloom. Previous government shutdowns have lasted as little as a few hours, and lawmakers may pass a short-term government funding bill to buy more time. While a shutdown does have economic impacts, it's less severe than a debt default. In conclusion, a government shutdown is a complex process that stems from disagreements on budget and spending levels. It involves the concept of a fiscal year, grappling with the debt ceiling, and the potential for a government to run out of money to fund itself. Despite the negative connotations, it's not a complete shutdown, and measures are in place to ensure the essential functions of the government continue.